Hello guys, I'm Paris the Options Guy and welcome to the No BS Trading Podcast. This is episode number 22, and before we start, I just want to say happy Diwali. And because it is Diwali over here and I think most of you guys are also celebrating Diwali, you will hear some crackers, noises of some firecrackers or anything in the background. So please do excuse me for just one episode. Diwali coincidentally has come over the weekend itself where I record my podcast. So that's why I cannot really do a lot other than removing the noise a little bit in the post processing of this episode. But still you will be able to hear some noise, but I hope it is bearable because I'm recording this at 3:30 in the morning so that I can get the least amount of noise. But that's all I can do. Anyways, let's just start with today's episode because today's episode is going to be pretty interesting because next week we have the US elections, and those are going to be very important thing to watch out for because US elections can really shape how the market moves in the coming few months and also in the coming few days. So we are also going to talk about that, and I'm exactly going to tell you how is the reaction going to be for for most of the major asset classes, and I'm going to tell you what you should do in the US elections and how can you benefit from the US elections, or at least how can you stay away from the danger in the US elections. Anyways, after that we are also going to discuss what the Fed can do in the interest rate decision that it is going to take in the next week, and we are also going to talk about the three new IPOs, actually four new IPOs that are going to come in our markets next week, out of which one is a very popular company that most of you guys use or most of you guys are customers of. But without any further delay, let's just start with the episode. Also, let me know how this new lighting looks. I decided, since it is also Halloween, let's just change the lighting up for a bit. Maybe I'll do it for an episode or two and then I'll shift to the normal lighting. But yeah, anyways, let's just start with the podcast without any further delay. So first, let's talk about what happened in the previous week, starting off with the GDP data that came from the US. And the GDP of the US came out at 2.8%. Expectations were that it will come out at 3.0%. So pretty much you can say the GDP coming out softly lower than what was expected, but still it is a good number of GDP. US isn't expecting a very big slowdown. Now, what I would like to say is that the US GDP mostly is being driven by government spending right now. If you go and look at the individual parts of the GDP, so what is GDP made up of? It is made up of public consumption, it is made up of government expenditure and more such things, right? Investment and all that stuff. Now I won't go into the details, but if you see, most of the GDP in the US is being driven by not public expenditure, but government expenditure. Now, this is the reason why. So the government spending is the reason why you are seeing such high GDP numbers still. Because a lot of other indicators in the US, a lot of indicators of the US economy are saying that the US is not in such a great shape. The economy is not in such a great shape. You look at anything, be it consumer spending, be it inflation and all that stuff, it is saying that the economy is not in such a great shape. So how is the GDP coming still at such high rate, right? And the simple answer is that the government spending part of the GDP is contributing to most of this growth, and that is the reason why I think, on paper, yes, a good number, 2.8% rise in GDP. Yes, expectations were 3%, but still 2.8% is fine. But in reality, things are not so rosy, because if you see, this 2.8% growth should indicate that companies are doing great, well, and all that stuff. But in reality, only the people at the top are doing much better than the people at the bottom. Because if you see actually, there was a survey which I read about small companies in the US. Most of the companies said that they are expecting things to not go so well in the next 12 months. Now, if I do get the link for that survey, I will definitely put it um in the description of this episode, but I don't think I will. And okay, again, if you don't have to believe me on that. just if you look at any ground reality report of how the US is actually performing, like some sort of a hotel owner in some small city in US, just go and ask them, right? And don't ask them, but just look at any sort of interview from those people, or read any survey and all that stuff, and you will understand that the reality is not so good. The numbers which are being said, told to us, and the reality, there is a very stark difference between those things. Anyways, again, the market always reacts to just these numbers, and the market will continue reacting to only these numbers. uh, you know there will be very small number of people who will go and look at the ground reality, which has always been the case, and I think it will continue to be the case. Anyways, after that, on Friday, we had the unemployment rate, and the unemployment rate for the month of October came out at 4.1%. Expectations were also 4.1%, so in line with the expectations. But as I said, that we can expect a bit of a spike in unemployment soon in the coming few months. I think unemployment can definitely see a very good spike, because whenever the unemployment rate crosses its 36-month average, you will see a very big spike in the coming months, and that has been true for the last 70 years. For the last 70 years, whenever that has happened, more I think, like, except for one time, every time whenever the US unemployment rate has crossed its 36-month average, we have seen a very big spike in the unemployment, and you can go on and check it in TradingView. Just do one thing: type unemployment rate, US unemployment rate, and open the chart, okay? And switch it to monthly time frame, and then what you have to do is just put an indicator of moving average. Put a moving average indicator and set the value of the moving average to 36, and look at it. Whenever the unemployment rate has gone above the 36-month average from below, okay, you have we have always seen a spike. And so that's why that has already happened a few months ago, and I think unemployment rate can continue to climb in the coming future. But as of now, unemployment rate staying pretty much um, as expected, and a little bit below the recent highs, because the I think 2 months before, unemployment rate was at 4.3%, so slightly below that. But again, this could just be a bit of a pullback, you can say, and then we can continue our journey on the upward trajectory. But as of now, unemployment rate not disappointing for the markets. Anyways, that was it for the previous week. Nothing really more interesting happening in the markets in the previous week, but let's move on to the next week, because there is so much happening in the coming week in the markets. Now, next week is important because of the US elections, first of all, and the US elections are going to happen on November 5th, and that is Tuesday. So, what is happening with the US, and how are the elections panning out? So if you see, the two major you can say part runners for the president are Mr. Donald Trump and Mrs. Kamala Harris. And Donald Trump right now has a chance of winning. The prediction markets are predicting that Donald Trump has a 55% chance of winning, and Kamala Harris has a 45% chance of winning. So Donald Trump has a slight advantage, you can say, or a slightly higher probability of winning. But I would say that these prediction markets can be easily skewed also. There can be some people who are betting big over there, because of which the predictions can be a bit skewed. But anyways, keep this in mind, that the you can say it is pretty close. The race between Donald Trump and Kamala Harris is pretty close. Anyways, what will happen if either of them comes to, you can say, comes into power? Now, the simple thing is that if Donald Trump comes into power, you will see you can say an appreciation of risky assets, like be it stocks or be it any sort of other risky assets. And if Kamala Harris comes into power, you will see a very good sell off in these risky assets. And there is one more thing which will spook the markets if Kamala Harris comes into power, and this will be like, it will completely crush the markets, and that is that Kamala Harris has also decided to actually put tax on unrealized gains on unrealized gains. Keep this in mind, okay? As of now, there is no tax on unrealized gains anywhere. I think, I think mostly there is no tax on unrealized gain. But if Kamla starts to put tax on unrealized gains, what will happen is that the flight of capital from the US markets, from the US financial system, will be so enormous that you will see US crashing completely. Okay, not completely, but you will see a very severe correction in the US markets, and all of that money will flow into the whole world, basically, is what you can say. So the liquidity from the US will start to get out, and it will get transferred into every part of the world. Now what this will also do is that it will depreciate the dollar, because everyone will start to sell their dollar assets, everyone will start to sell their dollar denominated assets, and they will switch into other currencies, right? Because if you want to invest in Indian stocks, you will need to switch your dollars for Indian rupees, right? And then you can buy Indian stocks. So what will happen is that dollar will depreciate. If dollar depreciates, what this will do is that this will make the imports for the US more expensive, right? Because dollar is depreciating. And what this will do is that this will create more inflation. So if Kamala Harris comes into power, what will happen is that markets will react negatively, and they will react negatively by big margin, very big margin. Keep this in mind, okay? Because as I said that now it is like BJP and Congress itself, right? When our elections were earlier in this year, a few months ago, what happened was that when BJP comes into power, market was reacting positively, and when Congress comes into power, market reacts negatively. So same is the case with over here also. If Donald Trump wins, market reacts positively. If Kamala Harris wins, market reacts negatively, okay? This will be what is expected out of the markets for at least stocks, okay? First of all, we are going to talk stocks, and then there are some more other things which we are also going to talk. But yes, for stocks at least, I hope you guys understand. Now let's talk about gold, and let's talk about like commodities in general. But let's talk about gold majorly, because you guys mostly will be invested in gold when I talk about commodities, right? So for gold, what will happen is that you will see a sharp sell-off if Donald Trump comes into picture. Now, why would you see a sharp sell-off if Donald Trump comes into picture? Because you see, when do you invest in gold? When do people turn on to gold? Now, gold is a safe haven asset, right? Gold is a safe haven asset. So what does this mean is that in times of uncertainty, gold starts to rise. People start flocking gold, right? So if Donald Trump comes into power, what will happen is that the uncertainty from the markets will crush, right? Uncertainty will go away, because people know that Donald Trump will not, whatever policies that Donald Trump starts, it will be good for the stock market, okay? It will be good for the companies of the stock market. It will be good for the finances, basically the whole financial sector of the US, right? So because of that, what will happen is that you will see a sharp sell-off in gold, because what happens is that the uncertainty is going out, right? When the uncertainty is going out, it will mean that people will start to exit their safe haven assets, and they will reallocate that money into riskier assets. Now, as I said, right, if Donald Trump wins, the riskier assets will start to appreciate, right? People will start buying riskier assets, and that will happen when people exit their money from safe haven assets into riskier assets. So I hope you guys understand that. So in the short term, you will see gold correcting, and in the long term, gold can continue its up move that it is doing. If you see, just in 2024 itself, I think gold is up more than 30%, more than 35%, right? So what this up move in gold is saying is that there is a structural shift in the uncertainty in the coming few years in the market. Because if you see, gold was asleep for a long time, right? Just a long time, gold was just consolidating. Just look at gold's chart. Go on and log into TradingView or any other like platform that you use, and just look at the chart of the gold, right? You will see that gold has been consolidating since a long time, and it has finally broken out. So what you have to understand is that when such type of breakouts happen, and when you are seeing a sustained rally in gold, this is indicating a structural shift. So this structural shift will not, I think, completely change by the fact that Donald Trump or Kamala Harris is coming into power. This structural shift is something which is more longer term than that. So if Donald Trump comes into power, you will see a sell off in gold initially, but then we should continue this up move in gold. And so this sell off that will come in gold, most probably, okay, most probably, if this sell off comes into when the sell off comes in gold, you should take up you should start accumulating gold. You should start accumulating gold if you prefer to do so. And if Kamala comes into power, what will happen is that gold will see more appreciation. Why? Because uncertainty will increase in the market. Uncertainty of what? One thing is that the unrealized gains, the tax on unrealized gains, right? If that happens, first of all, as I said, that flight of capital from the US financial system will be enormous, and that liquidity will flush into every part of the world, mostly every part of the world. And that's why, if you see, the uncertainty is rising, right? So people will also flock onto buy gold, and that is the reason why you will see an appreciation in gold prices also. So if Kamala wins, you will see an appreciation in gold price or any other commodity also, be it silver, because a lot of people invest in silver also. So if Kamala wins, you will see a bid up into silver prices and gold prices. But if Donald Trump wins, you will see a sharp decline in gold prices, although that will be a short-term correction in gold, which can also be used to take a buying or which can also be used to accumulate gold for long term. So that is for commodities. Now let's move on to crypto. And for crypto, the crypto scene is very simple. The Democrats, that is Kamala Harris's party, they do not support Bitcoin. Okay, they do not support Bitcoin, and Donald Trump supports Bitcoin heavily. Okay, and by Bitcoin I mean the whole cryptocurrencies and all that stuff. Okay, if I am saying Bitcoin, please assume that I'm talking about the whole cryptocurrency space. Okay, so if Donald Trump wins, this is very obvious, cryptocurrencies will blast, and you will see a huge appreciation in cryptocurrencies, because whenever they rise or whenever they fall very heavily. And if Kamala Harris wins, I think if Kamala Harris wins, you will again see a huge sell-off in crypto markets, because Bitcoin is at an all-time high. That means a lot of people are in long positions, be it by buying Bitcoin or be it in futures, be it in any other way, right? A lot of people are long Bitcoin or any other cryptocurrencies, right? They will start to panic and they will sell off. Now you have to understand that, again, I myself am not a pro in the whole cryptocurrency space. Let me be honest, okay? I do not know so much about Bitcoin, but if you, I think a lot of people do think that Bitcoin is the next like money, the next, basically the Bitcoin is the replacement for the fiat financial system, the fiat currency system, right? So if Kamala wins, that this will be the best thing for you, because then you can accumulate a lot of good coins or anything, right? A lot of good cryptocurrencies at a very good price, because I think if Kamala Harris wins, you will see a very sharp bid, oh sorry, not bid, but a very sharp sell-off in Bitcoin, and it can easily come down 10%. For Bitcoin, 10% in a day, I don't think is any sort of problem at all. So I think if that happens, you can easily accumulate Bitcoin also. Again, I do not know what Bitcoin does as of now. I haven't dived deep. I haven't, you can say, dived deep into the whole cryptocurrency space and how they work and what is their future potential. I do intend to do that, but right now I don't have so much knowledge. But yes, if Kamala Harris wins, you will get a chance to buy cryptocurrencies at a very good discount. But yeah, if Donald Trump wins, cryptocurrencies will appreciate heavily. Okay, because Donald Trump is pro crypto, and by pro crypto I mean he supports cryptocurrencies, and the whole crypto space. I hope you guys understand that. But yes, those will be the implications of the US elections. And after the US, and one more thing, the US elections, the result of the US elections will mostly come either by, I'm telling about Indian time. In Indian time, it will either come on Wednesday morning or Wednesday night, most probably. Now, sometimes US elections do take time and sometimes it might take a few days, but most probably they should come either on Wednesday morning or by Wednesday night. Indian time. Okay, I hope you guys understand that. Indian time. Anyways, I think you will get the updates of the US elections from numerous number of sources on the internet. So you can basically easily understand who is winning and who is losing. Okay, so I hope you guys understand that. After that, on Thursday we have the Fed interest rate decision, and it is expected that the Fed will cut rates by 25 basis points, which a rate cut at this point is just I don't know, it is very like useless to do, because I said this in the previous times also, when in September the Fed cut rates by 50 basis points. I said that it is no need, there is literally no need for the Fed to cut rates by 50 basis points, and now the Fed, it is expected that the Fed will cut rates by 25 basis points again this week. In my opinion, will this be good for the markets in the long run? No. Why? Because inflation is not, again, the progress for inflation has slowed down. Okay, the normal CPI inflation, yes, it is coming down, but other types of inflation like core inflation, no, not coming down. The progress there has been stagnant. Super core inflation is actually going up. Super core inflation is going up, and the Fed is cutting rates at that point. If you see PC inflation going up, if you see the PPI inflation, it is also not showing a good amount of progress. And at this point, if the Fed is cutting interest rates, it means that the Fed can reignite inflation. I think Fed definitely if the Fed continues to cut rates, I think this will be a bit of a mistake that the Fed is doing right now by cutting rates. Definitely, because a lot of things are pointing that Fed should not cut rates. Even the bond market is saying that the Fed should not cut rates. And how is it saying is that, I'll show you a chart over here right now. The chart will be displayed right now. And if you see the 10-year bond, okay, the yield on the 10-year bond made a low just one day before the Fed cut rates by 50 basis points. And since then, it has been rising. Whereas if the Fed, it should have actually dipped a lot when the Fed cut rates by 50 basis points, right? But since that day, if you see the Fed, the yield is just rising. So I always say that the bond market never lies. And the bond market is telling us that maybe the high number of rate cuts that everybody is expecting in the next few months or in the next year may not be true. Maybe the Fed might hold rates higher because inflation might come back. Again, this is a developing story, or you can say this is a developing um, you can say something which is developing right now. So I would give it a bit more time, but still the bond market is telling that something is off over here. And yeah, definitely, in my opinion, 25 basis points cut should not be the case over here. The Fed should actually hold rates higher. Although again, if the Fed does not cut rates, what will happen is that you will see a very good sell-off in the markets, in the US markets, and also, yes, subsequently in our markets also. However, if the Fed cut rates by 25 basis points, I think you will see still a bit of a sell-off, because it would have already been discounted in the market. But that is something which depends on the price action of the US markets just before the rate cut. Okay, so anyways, I hope you guys understand what are the implications of this 25 basis point rate cut. But aside from that, there is nothing really else which you need to look out for in the markets in the next week. These are the two major events that are happening in the markets. But now let's move on to the three new IPOs that are coming in our markets next week. Now next week we have three IPOs, and we'll start off with the most interesting one, and that is the Swiggy IPO. Now all of you must have ordered from Swiggy, and its competitor Zomato is already listed on the stock exchanges. So Swiggy decided, you know what, let me also take the advantage of listing on the stock exchange. So Swiggy is launching an 11,300 crore IPO, out of which 499 crores will go to the company, and the rest 6,800 crores will go to the promoters who are selling their shares. So good enough amount going into the company. So this IPO will open on November 6th, which is going to be, I forgot the date. Yeah, it is going to be Wednesday, and it will close on November 8th. So should you apply to this IPO? First of all, from the listing gains perspective, if you only want listing gains, then the answer is no. Please don't apply to this IPO for listing gains, or else you might also face the same fate as the previous IPOs, which had low listing gains and listed in discount. Okay, so that's why don't apply to this IPO if you are applying only for listing gains. Please keep that in mind. Okay, so that is out of the question. Now let's move on to applying for investment purposes. Should you apply to this IPO if you want to invest in the company? And the answer to that is, I'm just going to tell you that right now. So listen to me. So what this company does, very simple. It does food deliveries. It also provides dine-in options. It also provides B2B solutions for restaurants, be it logistics, be it connecting to wholesalers and all that stuff. It also provides cloud kitchen services. Okay, all that stuff. I hope you guys understand that. Very simple, almost similar to what Zomato does. It also provides, those Blinkit type services. Okay, Swiggy has Instamart, Zomato has Blinkit. Okay, so how is the company doing? First of all, so if you see over here, revenues have been growing quite well over here. In FY22, revenues were at 6,100 crores. In FY23, they jumped to 8,700 crores, and in FY24, they've jumped to 11,600 crores. So pretty good jump in revenues. But on the other hand, profit after taxes haven't been so great, because there have been no profits. Because if you see, in FY22, 3,600 crores of loss. In FY23, 4,100 crores of loss, and in FY24, 2,300 crores of loss. So yes, the losses are narrowing down, but still a very high number of losses. Okay, pretty good amount of losses, and because of that, it is a bit concerning. So what would I say? Should you apply to this IPO from the investment purposes? Now, one thing that you should keep in mind, and one thing that you will see a lot, is that whenever a loss-making company comes for an IPO, most of the times the price of the share goes below the IPO price, and then it starts to move up. So in my opinion, I think you should not apply to the Swiggy's IPO. If you want a pie of the whole food delivery business and all that stuff, I think still Zomato is a better option. Why? Because it has, first of all, it is net profitable. Although I agree that the profit it is making is tiny right now, but it is still net profitable, and you have to acknowledge that it is growing at a better pace. In my opinion, it has a better hold in the whole whole, you can say, industry, in the whole food delivery industry. Talking about one of the major verticals that is growing right now is the whole quick commerce vertical, right? And in that space also, Blinkit is just killing it. So in my opinion, Zomato is just on a better poised, you can say, company. Now you would also say that what about the valuations? Isn't Swiggy isn't Swiggy less, you can say, less expensive than Zomato? Then I'm going to tell you one thing. Now, we would ideally compare them on PE ratios, but you have to understand that for Swiggy, the PE ratio is a negative. So comparing them by PE ratio is not really um, possible right now. So another way to compare them is with price to book value ratio. And in that sense, Zomato's price to book value right now is 7.9, and Swiggy's price to book value at the price of the IPO is 11.14. So even on that metric, Swiggy is still an more expensive share as compared to Zomato. So in my opinion, don't apply to Swiggy's IPO. Rather stay away from it if you want to buy Swiggy. Now, I'm going to tell you one thing. So Swiggy's price band is 370 to 390. That means if you want the IPO, you will probably get the shares at 390 rupees. Are they worth 390 rupees? In my opinion, no. If you get a 30 to 40% dip in share price, then think about buying. In my opinion, the fair value of this share is probably near 200 rupees. Let me be very honest. The fair value of this share is probably near 200 rupees. Below that, better. But right now, if you want to buy, if you want to invest in Swiggy, please don't. That is just, Zomato will provide you with much better opportunities or just much better financials. Zomato is just a much better company. It is not making huge losses. That means it has lesser burden of taking on more capital as compared to Swiggy. And again, with the industry trends, if you are seeing that food delivery business, be it quick commerce, anything, they are picking up heavily. So I'm not saying that Swiggy will not come into profit or anything, but what you will need to understand is that it is still a bit far away from profit. So it still has to face the pressure of staying in a loss and surviving. You have to keep this in mind. Whereas on the other hand, Zomato is already profitable, as I said, but as I said that it is not very profitable. And investing right now in either Swiggy or Zomato is again not that great, because if you look at Zomato's PE ratio, it's 431. Do you understand that? 431 PE ratio. That means you are paying 431 rupees for every 1 rupee of earning. That's just, again, very high valuations. Again, some tech companies, they do command very high valuations when they are just getting profitable, and when the profit rises, like they made 50 crores profit, next quarter that can probably even 4-5x and go to 200 crores, and you will see this 431 get down to like 150 or 200 and all that stuff. But still, right now both Zomato and Swiggy are on the expensive side of things. Swiggy, from the with respect to the IPO price, is an expensive company which is still loss making, and Zomato, with the current market price, is still an expensive company. So talking about just Swiggy, don't invest in this IPO. There are much better opportunities. And again, if you still want to invest in the whole food delivery, if you want a pie of the food delivery industry of India, I think Zomato is a much better bet in my opinion. And so that's why you should skip Swiggy's IPO. And let's move on to the next IPO, which is Sagility India IPO. And this is a 2,106 crore IPO, out of which entirely is going to go to the promoters of the company who are selling their shares. So what does Sagility India does? Now this is a bit of a complex, you can say they have a bit of a slightly more complex business that they do, but I'm going to try my best to explain to you guys what is it. So Sagility India is a service provider. Okay, it provides services to US based healthcare providers as well as the whole US based healthcare system. Okay, so how does it provide that? So it provides mostly to insurance companies and their, you can say, partners, like be it hospitals and all that stuff. So first of all, it provides services to the payers, of the healthcare services, right? Now who is the payer, right? The payer might probably be, just a second. Yes, the payer might probably be a health insurance company, right? Who will pay for the a health insurance company or any other company who pays for your healthcare benefits, right? Or be it even the government, right? So those are the payers, right, for the for the healthcare, right? And then there are the providers who will provide you the healthcare services. Now those can be independent doctors, those can be hospitals, those can be some other things, right? Some like pharmacy companies, or they can also be some technology companies who are providing healthcare solutions, right? So it provides all services to both of these companies. Now what type of services does it provide, right? Now I'm going to tell you something, tell you some few of their services, which is entire operational spectrum, right? uh, so it can be administrative and clinical services functions, right? Then there can be payment integrity, claims administration, clinical management, and all other services. Okay, there can be other things also like revenue cycle management and all that stuff, right? Now revenue cycle, by revenue cycle means management of the revenue that the healthcare insurer is earning, right? So tracking the, you can say, premium payment on someone's you can say like I don't know, medical insurance and all that stuff. So I hope you guys understand that. Again, I myself am having a bit of a hard time explaining this to you guys because I myself am not really that acquainted with this type of business model, but again, seems a good business model. Anyways, let's move on to how has the company performed, how is the revenues moving. So if you see revenues over here in FY22, revenues were 940 crores. In FY23, they jumped to 4,200 crores, and in FY24, 4,700 crores. At the same time, profit after tax, if you see, in FY22, they actually made a loss of 4 crores, but in FY23, jumped up till 143 crores in revenue, and in FY24 jumped up to 228 crores. Now you have to understand that this company has completely a US client base. So this company completely is based out in US. The company's business is based in US, and there is no business in India. Okay. Now again, is that a bad thing? No, not at all. If you're earning money, it can also be from US, and it can also be um, from outside of India, anywhere. Okay. So should you apply to this IPO? I would say don't apply a lot of your money, okay? Because again, this is a company which is growing at a very fast pace. Definitely that is a very good thing, but you have to understand that in US the competition for technology enabled services is very high, and this company is exactly where it is. This company is exactly competing with a lot of other companies. So yes, if you want to apply, if you have a very big portfolio, which I come back to a lot of times, is that you have 15 lakh 20 lakh portfolio and all that stuff, then applying for 1 to 2 lots is fine. But I would say don't apply a very big quantity as of now, because if you also see, don't give it a very big amount of your portfolio, okay, if you want to invest in it. Okay, so and that is one thing. Because if one more thing that you can also see is that the issue, the IPO is priced a bit on the aggressive side. So the company's promoters are definitely trying to cash out over here. Because if you see, one more thing is that uh, if you go and look at the IPO proceeds, what will the IPO's proceeds used for? If you see, there is no such thing. The IPO proceeds only show that the IPO proceeds will be used to will be used by promoters who are selling their shares, right? So no more money is also going into the company. That is also one thing. So that is why it looks like the promoters are trying to milk out the market, right? The promoters are trying to get liquidity from the market and exit their investments over here. So in these types of cases, it is better to wait for the markets, to wait for the IPO to get listed and then correct a bit. Okay, so only if you have it as a very small part of your portfolio, very small percentage of your portfolio, then you can apply, or else don't apply for investment purposes. Now, I didn't say tell you one thing is that should you apply to this IPO from listing gains perspective. If you want listing gains, again, the answer to that is also no, because as of now, the listing gains is only, the gray market premium is only at 10%, which is again not that high. So doesn't really make sense to apply to this IPO from a listing gains perspective also. So that is it for Sagility India. Now let's move on to the last IPO, actually second last, but there is one more IPO which is I forgot the name. Yeah, Niva Bupa Health Insurance Corporation, which I will talk about in the next week's episode, because this episode is already getting a little too big and I still have more things to talk about. So that's why I will talk about that IPO in the next week's episode. But let's move on to the Acme Solar Holding Limited IPO. Now this is a 2,900 crore IPO, out of which 2,395 crores will go to the company and only 505 crores will go to the promoters who are selling their shares. So a good amount of money going to the company itself. Okay, so what does this company does? Now this company builds, maintains and owns a lot of renewable energy projects. Okay, be it wind energy, be it solar energy. Actually those are the two main projects itself, two main sectors itself, or the projects that the company makes, wind and solar energy projects. Okay, so this company, as I said, is that it makes solar these projects, it constructs these projects, it maintains these projects, and it also owns these projects. And it has a lot of, um, contracts with the government of India for generating energy and giving it to the government of India, right? So it has a lot of, not government of India, but you can say government bodies, like, be it electric bodies, like, any sort of state electric corporation and all that stuff, right? So it has a good amount of, you can say, contracts already lined up for the next few years, for its revenue and all that stuff and all, and whatever, right? It also has a good amount of diversification in its business. It is also the largest renewable energy company, which I forgot to say in the start over here. But yes, it is also the largest renewable energy company in India. So how has the company performed then? So if you see revenues over here in FY22, 1500 crores of revenue. In FY23, the revenues dipped a bit to 1360 crores. And in FY24, the revenues jumped a little bit, but still not higher than 1500 crores to 1466 crores. So at the same time, profit after tax has been a bit violent over there, because in FY22 profit after tax was 62 crores. In FY23 the profit after tax was actually a net loss of 3 crores, and in FY24 profit after tax jumped to 697 crores. Now I went and looked into the financial statements, as because I wanted to look at how the hell did profit after tax jumped so high. And it was actually because of an exceptional item in the balance sheet. But still, if you see at the EBITDA numbers, earnings before, basically you get the EBITDA numbers, right? Earnings before interest, tax, depreciation and amortization, those have been at a constant rise over here. That means the company, yes, it is earning, it is constantly in growing in terms of how much it is earning. But still, if you see, there have been surprises after the EBITDA numbers, and this is mostly because the company, the projects that it makes or the assets that it has, it is selling them, and it does a lot of selling, you can say, of those assets, projects and all that stuff, because of which many times you will see a bit of a volatility in the profit after tax numbers. Now, is this a bad thing? In my opinion, I think going forward, if you give the company some time, it can definitely stabilize and go on a sustainable trajectory of good profit after tax increments. So should you apply to this IPO? In my opinion, again, same as previously, as I said, that in my opinion you should definitely apply to this IPO. But one thing that you should keep in mind is that the company is the the whole, you can say, the valuation of the company is not very bad, but at the same time it is not very good also. So should you apply to this IPO? Definitely apply, but keep this in mind that you might face a little bit of volatility and you might not see returns instantly in this in your investment over here. But yes, in the long term, it is a good company. And again, the until unless the government support for the whole renewable energy sector stays, this company will definitely benefit from that also. So definitely a good company to apply for. But keep this in mind that initially for a good for some time you might face a bit of volatility in the share price and thus on your investment also. But yes, should you apply to this IPO from the listing gains perspective? So the answer right now is that we don't really know, because the gray market premium is at 0%. Chances are that the gray market premium might get updated in the next 2 to 3 days. And if then the gray market premium is above 40%, you can definitely apply to this IPO. But if the gray market premium is below 40% by the last day of the IPO, then please do not apply to this IPO. Okay, don't take the risk for that. But yes, that was it for Acme Solar Holdings. And with that, complete and with that let's move on to the market analysis for the next week. Now talking about the market analysis for the next week, if you see Nifty just moving up 0.5%, basically making an inside candle over here, and Bank Nifty moving up 1.75% this week. So Bank Nifty definitely being more you can say more strong as compared to Nifty. Now for the next week, what is being indicated at least on the technical side over here, if you see Bank Nifty is in a bit of a consolidating range over here. So as of now, we cannot really decide the direction in Bank Nifty either on the upside also or on the downside also. If we want a downside momentum in Bank Nifty will probably need to go below 50,200, and then we can say that yes, Bank Nifty will start a new rally on the downside, and on the upside it is 53,000 above which Bank Nifty should close. If you see, this is the level above which Bank Nifty should close. I'm really sorry, I messed it up, but yes, this is the level above which Bank Nifty should close, which is 53,200. If Bank Nifty closes above this level, then we can say that Bank Nifty can start a new rally on the upside also. Now talking about Nifty has made a small candle, that too near the low of the previous candle itself, which is indicating that Nifty is not as strong as Bank Nifty, and Nifty can continue its move on the downside from here till 23,500. Okay, so Nifty is still a bit bearish given the fact that Nifty has not really moved up. Nifty is still a bit bearish, but Bank Nifty as of now not indicating any sort of a trend. Basically in the middle of this zone over here, where you have first resistance of 54,000 on the upside and you have a support of 50,200 on the downside. So that is that is what the market is telling us technically. Now one thing you have to keep in mind is that we have the US elections next week, which is on Tuesday. So market will totally be driven by the US elections in the next week. Okay, if Kamala Harris comes in, markets will react negatively and you will see a very bad sell-off in the markets. And if Donald Trump comes in, markets will react positively and you can see a very good recovery in the markets also. So keep that in mind. Okay, so most probably on Monday the market should stay consolidating over here and continue their move after Tuesday, after we have some sort of a certainty of either Donald Trump winning or Kamala Harris, I don't know, Kamala Harris winning. Okay, so that is it for the market analysis for the next week. As I said, you can't really decide anything right now for what is going to happen in the next week. What you can do is that don't just trade for the first half of the week. Okay, trade after Thursday or trade on Thursday or Friday, or basically once we have any sort of clarity of who is going to win in the US elections. It is better to stay on the sidelines and don't try to rush this by taking any sort of rash bets on the market. Okay, if you want to even bet on who is going to win, that is also a bit hard because the premiums in the market are on the higher side. So just doesn't make sense to even bet on the markets. I mean, even if you do bet on the markets, the thing is that you won't really you might not really get a good risk to reward ratio on your trade over here if you buy options, because options are already expensive and markets will need a big move on either side to justify the risk that you're taking. Okay, so I hope you guys understand that. But yeah, that was it for the market analysis for the next week. So yeah guys, that was it for this week, and thank you very much for watching till the end. And I know this episode was a bit big, but again it was important for me to explain to you everything in a bit of a detail, and make sure that all the important points are conveyed properly. But yeah, thank you very much for watching till the end. I hope you guys understood something new from this episode. I hope you guys got some new insight from this episode. But yeah, that was it for this week, and I will see you guys in another episode in another week. Bye bye.